What do we expect to come out of Russia?
Well, you mentioned Russian official Minister Novak said that Russian output might cut by about 500 to 700,000 barrels per day early next year because of the country stops selling oil to those countries that are going to implement the price cap on Russian oil export.
If that happens, let's assume it's 500, 700,000 barrels a day that Russia cuts back production of. What will the effect be on the price of oil?
Well, if it's really 500 to 700,000 barrels per day, it's not going to be a significant, huge impact on the prices because of different reasons. First of all, we are expecting lower economic growth next year, possibly slowdown or recession, which results to lower demand. Also, OPEC countries could substitute that amount if they are willing to and decide to do that. But still, the market was expecting something between 1 million to 2 million barrels per day. 500 to 700,000 barrels wouldn't have that huge impact on the market.
Sarah, you also mentioned the possible effects on the price of oil of just overall economic activity. Let's talk about China specifically, because China, on the one hand, is coming out from the zero COVID, which might indicate that they will have a greater demand for oil. On the other hand, they have a lot of people getting infected over there with COVID. What possible or likely effect do you see on the price of oil from what's going on in China right now?
Well, if you want to look at the uncertainties in 2023, one of the major uncertainties for market fundamentals on the demand side is China COVID policy and how fast China's economy and also consumers are going to go back to normal consumption of energy. And that's something that no one knows, and it's going to have a huge impact if we are going to have suddenly a significant ease on Chinese COVID policy and we have an increase in Chinese economic activity. But again, that's something that we do not know. But as what we saw in 2022, the Chinese COVID restriction policy had a huge impact on demand. It basically prevented for demand to increase further.
So you mentioned that China is one of the major elements of uncertainty in oil going into next year. So you led us there. What are the other major uncertainties about oil as we look at 2023?
On the demand side, economic slowdown and how much the recession or slowdown of economy is going to have impact on industrial consumptions and also consumption in general. But on the supply side, obviously, Russia remains the main question, how much Russian oil would be, and also gas supplied to the market. How would the sanctions and restrictions on Russian insurance and also logistics of transportation of Russian cargoes is going to impact on the market. Also, Iranian nuclear deal. As of now, it feels like it has been dead, but we've seen that last one, Iranian oil export increased from around 700, 800,000 barrels to about 1.1 million barrels per day. So there are some uncertainties both on the supply and demand side. The other important thing is also crude oil versus refined petroleum product capacity, because Russian oil might cut by, let's say, 500,000 barrels per day. Oil prices might not move significantly, let's say stay around the range of $70 to $100 per barrel. But refinery capacity is very important. And we know that, for instance, Russia is a major exporter of diesel and refined petroleum products to Europe and around the world. And would the global refinery capacity be able to substitute the shortages from Russia and also global shortages? In the United States, we have less refinery capacity as we had before COVID. So I think that's also a nuance that we have to keep in mind: refinery capacity and refined petroleum products prices versus crude oil production and prices.